Hello, and welcome to Dolphnartsian Investment. This analysis is for Abaxx Technologies on the Toronto Stock Exchange as of 4th of August 2026 with a share price of 27 Canadian dollars 56. The full report is on Dolphnartsian.ca. Abaxx runs a rare Singapore-licensed commodity futures exchange for LNG, carbon, metals and silver, a genuinely hard license to hold. But it is loss-making and pre-profit, and an unproven short seller allegation plus an undated regulatory review keep the outcome binary. The stock is 59% off its May high, so the call is hold, under review, on every horizon, bear 14 Canadian dollars, bull 55 Canadian dollars. Abaxx builds and operates a regulated commodity futures exchange and clearinghouse, licensed by the Monetary Authority of Singapore, trading physically settled contracts for LNG, carbon, battery metals and silver. That license is genuinely rare and hard to stand up, and the traction is accelerating. Second quarter volume reached 888,000 contracts, up 276% on the prior quarter, with year-to-date volume up 600%. It also completed its first multi-party carbon futures delivery in July, a physical settlement, which is much harder to fake than screen volume. Business quality is a middling 57, a real asset, still subscale. Now the reason this is only a hold. A short seller, Viceroy Research, alleges that much of Abaxx's reported volume is wash or incentivized trading rather than genuine liquidity. Abaxx categorically denies it, has engaged the law firm Paul Weiss, and has asked regulators to review the trading. These allegations are unproven and unadjudicated. We treat them as a live risk, not as fact, because scoring an unproven short report as truth would be adopting its book. Reviews sit with regulators in Canada and Singapore, undated. On top of that, the valuation is rich, around 360 times trailing revenue, and the company is still loss-making with under 2 years of cash runway. So the honest call is hold, under review, on every horizon, and to be plain about how wide the range is. If the review clears Abaxx and the volume ramp proves genuine, the credibility overhang lifts and the stock can re-rate. That is the $55 bull case, a 1 in 4 chance. If instead, a regulatory finding substantiates that activity was manipulated, the liquidity thesis weakens and dilution deepens at distressed prices. That is the $14 bear case, also 1 in 4. The middle, most likely path, is a range trade in the mid-20s to mid-30s while the dispute drags on, base $30, those tails roughly offset, which is exactly why it is a hold, not a directional bet. The next real check is second quarter results on the 17th of August. Now the other side of the ledger. Binary regulatory review, outcome unknown, undated, unproven wash trade allegation over core metric, loss-making, pre-profit, dilution risk, bear 14 Canadian dollars, minus 49% if allegations substantiated. Now weigh the risk against the reward. The bull case is roughly 100% above today, the base case the most likely about 9%, and the bear case a fall of about 49%, so you are risking about 49 to make 100. So, our call on Abaxx Technologies on the Toronto Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Dolphnartsian Investment at Dolphnartsian.ca. The link to the full report is in the notes below. Have a great day.